we're holding in a holding pattern, but economists aren't looking for anything to improve much. Hourly earnings up a tick maybe for the month, but year over year is still at 2.4% growth. And, you know, the work week the same as last month.
Well, we are going to look at things, in aggregate. So it's not just the payrolls, it's not just earnings. It's an aggregate of three things: payrolls, earnings, and the length of the work week. And that indicator is improving. And that's what matters for income growth in the second half of the year. And we expect that to accelerate and bring more consumer spending. So in fact, at BI Economics, we expect economic growth to accelerate in the second half of the year from its dismal pace in the first half.
What would push it to accelerate? We're certainly not going to see it in the July numbers.
So we expect more acceleration in income growth. In fact, this week we saw wages and salaries increased quite solidly in the latest personal income and spending report, despite the overall income number going down. But we think that income will eventually bring more growth in consumer spending, and consumer spending remains one of the driving forces in income growth.
Yelena, what's the impact, the likely impact of tomorrow's jobs report on the Fed?
Well, if it's more of the same, they'll be happy and just put another check mark. What they are worried about is inflation right now, and whether the recent slowdown in inflation is driven by temporary factors, as many on the FOMC consensus are saying, or whether it's a more pronounced and longer-term slowdown in inflation. That's kind of what drives some worries on the Fed right now.
Yelena, I do want to ask you a brief question about today's data, because we got durable goods orders that blew away the number we were expecting, up 6.4%, but factory orders ex-transportation down 0.2%. What's happening with the manufacturing economy?
So I am a little bit concerned about business investment on that front. We received the Senior Loan Officers survey earlier that week, which also showed some slowdown in demand in business lending. So this could be due to some uncertainty that businesses are not quite sure what to expect from Washington, D.C., and they need a little bit more certainty on that front.